Hi there, you're watching Market Cafe on ET Now with me, Shreyansi Singh, and over the next few minutes, I'll get you a roundup of the stocks that you should be keeping on your radar as well as global news and updates. But firstly, let's take a look at stocks in terms of the Wall Street and what that really did, because when you take a look at the S&P 500, that's the one that ended the session 0.2% lower. You did have Apple, which lost 4% in its worst day coming in since August, dragged the Nasdaq Composite 0.9% lower. When you take a look at Dow as well, 0.2% decline is what you're seeing there as well. Despite these losses, you do have all three of these indexes that are still on pace to end the week higher. So on your screens, you can see a weekly roundup of how they fared. The S&P 500 is the one that has seen an uptick of about 1.9% thereabout. Dow Jones is the one that was up 2.9% for the week thus far. And even Nasdaq Composite is up 0.9%. So that largely is the kind of handover that you're seeing on a daily as well as weekly basis. You do have more bank earnings that are expected before Friday's opening bell, including reports coming in from State Street, Citizens Financial and Regions Financial. So that largely is the roundup as far as Wall Street then is concerned. But let's shift focus then to oil as well as gold. Take a look at oil prices first, because oil prices fell back a day after settling in fact at a multi-month high on US President Joe Biden's latest sanctions targeting Moscow and a larger than forecast fall in US crude stocks as well. So crude inventories have been the one to watch out for in terms of those levels. Eighth draw is what you saw coming in as far as US crude stockpiles were concerned. And other than that, the sanctions since last week have been rattling the oil market. Currently, when you take a look at the price movements, then Brent crude is the one that fell 74 cents or about 0.9%, closed around that $81 per barrel mark as well, after rising 2.6% in the previous session to their highest since July 26. So quite the move coming in as far as Brent crude is concerned in terms of shifting direction. Now, when you take a look at US WTI, that is also the one that pulled back slightly, 1.7% pullback is what you're seeing coming in as far as US WTI is concerned. And $78 per barrel is the kind of level that you had after gaining 3.3% on Wednesday. Even for that particular benchmark as well, a little bit of a wait and watch mode at this point is what investors are in before Trump gets the keys to the Oval Office. So that is the one announcement, that's the one takeover in fact to watch out for. But moving on, then gold prices are the ones to look at after gold rose to a more than 1 month high after the latest US economic data pressured the treasury yields further, also following a soft core inflation reading this week as well. That also ramped up the bets coming in for a more dovish Federal Reserve policy. So when you take a look at price levels coming in for gold, spot gold gained 0.8%, $2,700 per ounce is the kind of level that you were looking at, and this was the highest since December 12th as far as gold is concerned. But moving on, let's get you a quick check going on what the Asian markets are doing at this point, because largely what you're seeing is a little bit of a mixed action, because you do have one index that is holding on to a tinge of green and the rest of them are at this point languishing just a tad bit. When you take a look at South Korea's Kospi, that's the one that ended the day yesterday in the green, but at this point it's down 0.6% on your screen as well. When you take a look at Nikkei, that is the one that's also down over 1%. There you have it on your screens, 1.1% decline as far as Nikkei then is concerned. And even Hang Seng is the one that is holding on to a shade of red, and the same can be said about Shanghai as well, that although has sort of shifted direction. So Shanghai definitely has shifted course at this point. Let's also take a look at China's macro data then, because that is also very important to watch out for. When you take a look at the 2024 GDP figure, that has come in at 5%. The estimate was 4.9%. When you take a look at Q4 GDP, then that has come in at 5.4%. That is above the estimate, which is 5%. And when you take a look at December retail sales, 3.7% is the kind of figure that you're seeing in terms of an uptick for December retail sales as well. That compares with 3.6%, which was being penciled in. So that largely is the kind of handover. As far as China's GDP and retail sales are concerned, let's take a look again at Shanghai, because that was previously in the red, currently holding on to a tinge of green, where Shanghai is also at, in fact, it's flip-flopping between green and red at this point, but ASX 200 is the one that was in green and currently holding on to that tinge of green there. You have it on your screens as well. So Back home, of course, you did have Nifty that shut shop around the 23,300 levels. Above the 23,300 mark, that's important to note. And a muted start is what is being penciled in. Quite the mixed handover that we have at hand. Not much of a change expected as far as Nifty is also concerned. So that largely is the kind of update that you have as far as Asian markets then are concerned. But moving on to important commentary coming in from Federal Reserve Governor Christopher Waller, who believes that the central bank could lower interest rates multiple times this year if inflation eases as expected. In fact, the policymaker also said that he expects the first cut to also come in the first half of the year, with others to follow so long as economic data on prices and unemployment cooperate. He also does not think that a cut in March can be ruled out, while also cautioning that he may be more optimistic than his colleagues at the Fed. Waller also said that inflation was back to trend, and he also believes that it will come in towards the target. However, while Waller cautioned that future data could disrupt the outlook, he also added that incoming President Trump's potential tariffs may not lead to higher inflation. So that's something that the market was watching out for, and some important commentary coming in from Christopher Waller right there. But moving on, then optimism prevails over the Israel-Hamas ceasefire deal, and we knew it was going to be a rocky road to implementation. Let's get you the latest updates then. Israeli PM Benjamin Netanyahu has accused Hamas of backtracking on select details of the ceasefire deal, following which he has also delayed the cabinet vote on the matter. In fact, Netanyahu's statement comes a day after US President Joe Biden and Qatar's Prime Minister announced the deal, which would pause the devastating 15-month war in Gaza and clear the way for the release of dozens of hostages. Digging deep into what's stalling the vote, Israel in fact claims that Hamas has tried to change agreed upon understandings for security arrangements along Gaza's border with Egypt. Following the announcement of the ceasefire, the Israeli army and the Air Force attacked 50 targets in Gaza over the last 24 hours. The said strikes have claimed 87 Palestinian lives across the enclave, including 7 people who were in a school sheltering displaced families in Gaza City, and 6 others killed in separate airstrikes on houses in Deir al-Balah, Bureij camp, as well as Rafah. According to medics, among those killed, 21 are said to be children. This after the celebration that ensued after the Israel-Hamas deal was inked and was widely expected to bring relief to Palestinians, including Gaza's children. Alright then, as we slip into a short break, we'll leave you with some more global news and updates to start your day with. More news and updates on the other side. Welcome back. Thank you so much for staying tuned in. Well, let's get you a roundup of the stocks that you should be keeping on your radar bright and early this morning. In fact, there's a few earnings candidates to look at. It was a strong show coming in. As far as heavyweight Reliance Industries then is concerned, you did have most segments beating estimates, positive surprise coming in for its O2C and gas exploration businesses, since the street was pricing in a muted quarter for these two businesses. However, on the flip side, you did have Jio that saw a slight miss coming in as far as the ARPU then was concerned, and you did have subscriber additions. There was a miss that was observed. As far as Reliance third quarter is concerned, brokerages still remain bullish on its long-term prospects, awaiting clarity on more value unlocking then. In fact, we do have Sharad who's standing by with the earnings fine print as well as the brokerage verdict then. Sharad, over to you.
Overall, Reliance reported a strong set of numbers with revenue and PAT coming in line, but a strong surprise coming when it comes to EBITDA and operational profit numbers. The OTC, retail and gas exploration segment beat analyst estimates, while there was a slight miss when it comes to the telecom segment. And the OTC EBITDA that jumped almost 16%, and this is because of the higher refining margins recovery, especially on a sequential basis. But the petrochemical deltas, they exhibited a mixed trend. Apart from this, there was a marginal lower KGD6 volumes impacting the oil and gas segment, but overall strong commentary coming when it comes to the retail growth as well. This is coming on a festive and wedding season as well. Now the company's net debt levels there stood at flat at roughly 115 lakh crore rupees, and the OTC segment that has been a strong performer, and a volume-led growth and higher polymer deltas were reported. Also, the company would be focusing on yield optimization. The retail segment itself, Jio Mart, actually expanded its product range almost 33% on a year-on-year basis, while oil and gas, the revenues were slightly on lower side because of lower gas and volume realization. As for Reliance Jio, ARPUs that came in at almost 203 rupees 30 paise, slightly less than the street estimate. They were estimating roughly 205 to 206. Subscriber addition was also slightly less, coming in at 33 lakhs or 3.3 million. But overall, the ARPU increase is going ahead with the telecom hike expected, and company stated clearly that the residual impact of the tariff hike will be expected to play out in the coming months as well. Apart from this, let's look at what the brokerage has stated for Reliance, and over here they have stated Nuvama that they have maintained buy rating with a 1673 rupees target price, and they have stated this is the highest ever EBITDA, and estimating a strong growth across segments, and also the new energy businesses foray on might equal OTC's profit next 5 to 7 years. IFL Security has also maintained buy rating with a target price of 1729 rupees, and also Elara Capital, they have reiterated accumulate, and the target price however has been reduced from 1632 to 1493. And lastly, DAM Capital has maintained a buy rating and a target price coming at 1550. Earlier it was 1521, and even CLSA is still maintaining their outperform rating on the stock.
All right, and that's the word coming in as far as Reliance then is concerned. That's the earnings fine print. But shifting focus to IT bellwether Infosys, that has also reported its numbers and upped their guidance. Let's go across and listen in to what the CEO and MD Salil Parekh as well as CFO Jayesh Sangrajka then had to say about the numbers.
Last quarter, we had seen discretionary becoming good in financial services in the US. Now, this quarter, we have seen financial services in Europe, also the discretionary showing signs of improving, and on retail and consumer products in the US is showing that signs of improving. So that coupled with how we delivered in the quarter was the reason why we changed the guidance to increase.
If you look at large deals, our large deals, while the overall large deal number you will see is remaining same, within that, the net new has increased significantly. So last quarter, our net new was 40%. This quarter, our net new was 60%, which means that the large deals per se, or the net new TCV of the large deals have gone up 1.5 times, between Q2 and Q3. Our large deal pipeline has become stronger, as we see. If you look at the headcount, we are on track in terms of headcount or the fresher hiring this year. We will be hiring 15,000 plus. We are expecting for FY26 at this point in time, 20,000 plus fresher hiring.
All right, the beat coming in on the revenue and guidance raise for the third time. That's the word coming in from the management at Infosys as well. But moving on, let's get you a list of stocks that you should be watching out for, other stocks that you should be keeping on your radar. In fact, we do have Ria who's standing by with just that list. Ria?
Yes, good morning. Let's take a look at the stocks that are going to be in focus today. First up, we have Havells India on the back of its Q3 numbers. Now, the revenue has gone up around 10.8% on a year-on-year basis, but we've seen the net profit declining by around 3.3% over the previous year. Even the EBITDA has declined by just about 1.5%, and the margins have also declined by 108 basis points, coming in at 8.7% in this quarter. We also have BPCL in focus today since they have executed a loan agreement of rupees 31,802 crores with State Bank of India Consortium to finance the projects planned at Bina. There's also AstraZeneca Pharma India Limited in focus today. They have received the permission to import pharmaceutical formulations of new drugs for sale or for distribution in Form CT20 from the Central Drug Standard Control Organization, the Government of India. So keep your eye out on AstraZeneca on the back of that. IREDA will also be in focus since the company has initiated the JVA for hydroelectric power projects, which is non-binding with certain entities including GMR Energy, GMR Power and GMR Lion Energy Limited. There's also Aditya Birla Fashion in focus since the QIP is opening at a floor price of rupees 271.28. Also keep your eye out on TVS Motors since TVS Motors company has entered Morocco and they have launched a range of two-wheelers of performance scooters, commuter and sports motorcycles. Lastly, also keep your eye out on Share India Securities since the board has approved the proposal of commencing portfolio management services. So keep your eye out on all of these stocks today.
All right, thanks Ria for getting us an update on the stocks that we should be watching out for. Lots of stocks as well as earning candidates to keep an eye on. But with that, completely out of time on this edition of Market Cafe on ET Now. Thank you so much for tuning in. Don't go anywhere because the market takes all of the action forward.
If you like this video, then like, share and subscribe to ET Now.